we just with Bitcoin, we just don't know how it trades as a financial asset. Like what Mike's saying about, gold being a bet on real rates is something that has been established over literally millennia, right? That concept, the trade-off between gold and paper currency and yielding paper currency is something, that connection, that linkage and dynamic, we've seen it across millennia, across, China, the US, Europe, Japan. Like we've seen it in all sorts of different environments over those millennia to be able to, in a very compelling way, understand that is the most probable linkage. I think the basic question with Bitcoin is, who knows? Like we haven't even gone through a real recession with Bitcoin, right? The acute dynamics in 2020, but we haven't really seen it. As a simple example, I thought it was very interesting how Bitcoin traded in response to the recent conflict in Israel, right? I thought this was very interesting, which is gold traded up, bonds rallied, and Bitcoin fell. And if you really think that Bitcoin is a contra currency that's likely to benefit from rising geopolitical tensions, right? You would have expected it to rally in that environment. And so like, these are the sorts of that's a little test case, right? Like how much, gold traded the way it's supposed to. Bonds, by and large, traded the way they were supposed to. Equities, the same way. Like how much confidence can you have in an asset that when you have what is essentially, in the obviously it's a terrible circumstance and a terrible dynamic, that's the terrible situation that's occurring there, but it is, in a global context, it's a relatively modest rise in conflict that's occurring, and you're seeing the dynamics of the market play out in a way that is inconsistent with what certainly I've been told by the Bitcoin community about how it'll trade.
Yes. What was it, Paul Tudor Jones, who said recently that gold and Bitcoin are a geopolitical hedge?
Sure, but they traded a whole heck of a lot differently, right? And those geopolitical hedges, like the way that you understand it as a geopolitical hedge is based on the fundamentals, which I think Mike has highlighted a very important part of the fundamentals, which is you do have a liability. Gold, if it's in your pocket, essentially other than confiscation, is in your pocket, right? You control it, right? It's a liability to no one. Whereas, Bitcoin is reliant on technology, engaged, run by other people. And so from the fundamental perspective, there's a question, and then it just comes down to the empirics. And that's the point, is if you're going to protect yourself from rising geopolitical tensions, like one asset has millennia across geographies telling you how it performs, and the other has, nothing, essentially no sample size. There is no sample size on Bitcoin's performance in rising geopolitical tension. And so if you're a saver, you have to recognize the uncertainty. You don't know how it's going to perform in that environment because we haven't observed it. Like your confidence just has to be very, very low in terms of how it'll do it. And the stress test that we saw in the last couple of days was a fail.